So what truly makes a business agile and, cost efficient in today's incredibly dynamic global landscape?
Yeah, it's a big question.
We often hear about tech breakthroughs or supply chains, but what about that fundamental piece, customer interaction?
Exactly.
Today, we're taking a deep dive right into that. The global customer service outsourcing market.
That's right. And our source for this is a really comprehensive market report. It's powered by cognitive market research.
Okay.
Our mission really is to unearth the most important insights from this analysis for you, give you a shortcut, kind of, to understanding the forces shaping global customer service.
Sounds great.
We'll look at performance from 2021 to 2025 and then projecting out to 2033. We'll track those compound annual growth rates, the CAGRs, across different regions, different countries.
Fantastic. I'm genuinely excited to unpack the nuggets of knowledge from this report. It's
Yeah.
not just the raw numbers, right? It's what they reveal about why companies are increasingly outsourcing. Some of it seems quite surprising.
It is. Let's start with the big picture, the global view first.
Okay.
This market isn't just growing, it's really soaring. Back in 2021, customer service outsourcing was valued at nearly $38.5 billion.
Wow.
By 2025, that's expected to hit almost $49.5 billion.
Okay.
And get this, by 2033, it's projected to reach a staggering $82 billion.
82 billion.
Yeah. That means a strong global compound annual growth rate, around 6.5% over that forecast period.
Wow, that consistent growth. Nearly doubling by 2033. That's impressive. What is that kind of sustained expansion signal about business priorities worldwide?
Well, it signals a pretty fundamental strategic shift.
Yeah.
The report highlights three core forces driving this.
Okay, what are they?
First, cost efficiency.
Mm.
But it's evolved, It's not just seeking cheaper labor anymore.
Right.
It's about optimizing how resources are allocated, reducing massive infrastructure overheads.
Makes sense.
Second, operational agility. Think about scaling up or down customer support maybe for a product launch, a seasonal spike, even a crisis.
Yeah, quick.
Exactly. Without the burden of hiring and training hundreds of new in-house staff. That's huge.
Definitely.
And third, digital transformation. This is key. Businesses aren't just outsourcing calls. They're outsourcing specialized tech solutions, AI chatbots, advanced analytics, omnichannel support, stuff that's expensive and complex to build internally.
Okay, so it's moving beyond just basic support.
Very much so. This is where that big picture starts connecting directly to the real-world business decisions you see happening.
Okay, let's unpack this then, some granular detail. Moving from global, let's break it down regionally, starting with North America. What's the report show there?
It's a big market, right?
It definitely holds a substantial share. North America's market generated just over $11 billion in 2021.
Okay.
It's climbing to nearly $14 billion by 2025 and projected to hit over $22 billion by 2033.
$22 billion.
Yeah, with an annual growth rate, a CAGR, of about 6%.
Okay. And within North America?
Well, zooming in, the United States, as you'd expect, really dominates.
It's heading towards an over $19 billion market by 2033, growing at just under 6% annually. So solid, steady growth.
Right, solid and steady for the U.S. But then Canada. The report seemed to highlight Canada's growth as particularly robust. What's happening there?
Yeah, that's a fascinating contrast, actually. Canada's market, while smaller overall, is really dynamic.
How so?
It was about $1.1 billion in 2021, but it's projected to nearly triple, think about that, to over $2.8 billion by 2033.
Triple, wow.
Yeah, boasting an impressive CAGR of over 8.3%. That's significantly higher than the U.S.
What drives that, do you think?
Well, this rapid acceleration often reflects things like a strong tech sector, definitely a push for multilingual support services, maybe specific government incentives making outsourcing attractive. It seems it's not just about cost-cutting in Canada, it's about accessing specialized capabilities.
Interesting. So a different dynamic. And Mexico?
Mexico shows a slower trajectory in contrast, growing at about 3.4% annually, expected to reach just over $425 million by 2033.
Okay. That distinction within North America itself, Canada's high growth versus Mexico's slower pace. That's really interesting. Highlights those regional nuances.
Absolutely.
All right, let's move across the pond. Europe, how does it compare?
Europe's regional market followed a pretty similar overall growth curve to North America, actually.
Okay.
Valued around $9.45 billion in 2021, projected to reach nearly $19 billion by 2033. That's an annual growth rate, just under 6%. So very close to North America's overall rate.
And the key countries within Europe, any standouts?
Well, Looking at the key players, you see some interesting variations in pace. Germany is a major contributor,
Right.
growing from around $1.8 billion to over $3.4 billion by 2033. That's about 5.7% annually.
Okay.
France is slightly faster, growing at 6.1%. The UK, a bit slower at 5.2%.
Hmm. Are there any particular hotspots in Europe, places with accelerated growth?
Absolutely. While Germany, France, UK are significant, it's markets like Italy, Russia, and Spain that really stand out.
Oh.
Yeah, they show higher growth rates, all hovering between 6.5% and 7% annually.
So faster than the big three there.
Exactly. This
Right.
often suggests, a maturing outsourcing ecosystem in those countries, increasing adoption, more investment.
Got it.
And just for context, other European nations like Sweden, Denmark, Switzerland, Luxembourg,
Hmm.
they show solid, steady growth too, mostly in that 5% to 5.8% range. The rest of Europe collectively is just under 5%.
Okay, a varied picture across Europe. Now let's shift focus again. Asia Pacific. The report calls it a dynamic growth region. What's driving that dynamism?
Yeah, dynamic's definitely the word. Asia Pacific is really a leader in growth.
Okay.
Started at over $12.6 billion back in 2021, set to explode basically to nearly $28.75 billion by 2033.
Yeah, that's a huge jump.
It is. It boasts the highest regional KGR globally, over 7.1%.
Higher than North America and Europe.
Significantly higher. China's a major contributor, of course, growing at nearly 6.8% annually, projected to be worth almost $8.8 billion by 2033.
Big numbers.
Japan is also robust, 6.4% CAGR.
And then there's India. I suspect India plays a big role here.
India is, well, it's a story in itself. It shows a particularly steep climb.
Really?
It holds the highest TGR in the entire region, maybe globally, for major countries, an impressive 8.9%.
Almost 9%.
Yeah. Projected to grow from just over $2 billion in 21 to over $5.6 billion by 2033.
What's behind that surge in India specifically?
It's really a combination of factors. A vast English-speaking talent pool, we know that.
Right.
Significant government support for the IT and BPO business process outsourcing sectors. And a really strong focus now on digital capabilities. India is evolving beyond just, call centers.
Into higher value stuff.
Exactly. High-value services like analytics, specialized back-office support, that's where a lot of the growth is coming from.
Fascinating. Who else is significant in APAC?
Other key players. South Korea is growing strongly, nearly 6.7%. Australia, interestingly, over 7.5%.
Well, higher than China.
Yeah. And Singapore, too, remarkably strong growth, over 7.6% CGR. You also have Southeast Asia collectively growing well, Taiwan, too, both over 6.3%.
That high growth across Asia Pacific, especially India's surge, it's incredibly compelling.
It really is.
It makes you consider, like you said, the talent pool, tech readiness, maybe policy creating this perfect storm for outsourcing growth.
That's a good way to put it.
Okay, let's pivot again. South America. What's the picture there?
South America's market, it stood at about $2.65 billion in 2021.
Okay.
And it's projected to reach nearly $5.8 billion by 2033. That's a healthy regional CAGR of over 6.7%.
Solid growth. And within the region.
Brazil is the largest market, projected to more than double its value to almost $2.44 billion by 2033. That's a 6.6% CGR.
Okay, so the giant there.
Right. But interestingly, Argentina and Colombia are actually growing even faster,
Oh, yeah.
both seeing over 7.2% annual growth.
Why might that be?
This often reflects a strong nearshoring trend, particularly for North American companies.
Proximity.
Exactly. Valuing cultural alignment, time zone compatibility, alongside the cost efficiency. You also see good growth from Peru and Chile, both over 6.2%.
So what does this all mean for businesses maybe looking at Latin American markets? It sounds like there's a growing appreciation for that regional proximity, not just lowest cost globally.
That seems to be a key factor, yes.
All right. Let's talk about the Middle East next. The report described it as surging. That sounds dramatic.
It is pretty dramatic growth, yeah. The Middle East market is indeed surging, from nearly $1.6 billion in 2021 to almost $3.7 billion by 2033.
Okay.
And it boasts the highest overall regional KGR.
Higher than Asia Pacific.
As a region, yes, 7.35%.
Wow. Okay, who's leading that charge?
Saudi Arabia and Turkey are significant contributors, both growing strong at over 7.1% annually.
But the UAE really seems to stand out in the notes here. Exceptional growth.
The UAE is a true outlier, yes. Projected to grow from about $247 million in 2021 to over $656 million by 2033.
Okay.
With an exceptionally high KGR of almost 8.5%.
8.5%. What's fueling that specifically in the UAE?
It seems to be fueled by the region's broader economic diversification efforts, moving beyond oil.
Right.
significant investment in smart city initiatives, a burgeoning e-commerce sector,
Mm,
all demanding robust customer support infrastructure.
makes sense. E-commerce needs support.
Absolutely. And we also see very strong growth from Egypt, over 7.7%, and Qatar at 6.8%.
The Middle East's strong growth, particularly the UAE, that really positions it as a maybe an unexpected hotbed for this trend,
Yeah.
shows how new economic hubs are building out service capabilities.
Definitely want to watch.
Finally, let's explore Africa. What does the report show there?
Africa's total market is also showing strong momentum, growing from just over $1 billion in 2021 to over $2.5 billion projected by 2033.
Okay.
That's a regional CAGR of over 7.2%. It's also very strong growth.
And the major players on the continent.
Nigeria is a major contributor, projected to reach over $1.2 billion by 2033, growing at about 6.9% CAGR. But it's South Africa that's really leading the charge, growth-wise, on the continent.
How so?
It's showing a CAGR of over 7.8%. Growing from about $325 million to over $821 million by 2033.
Higher than Nigeria's growth rate.
Yes.
Yeah.
This growth often points to increasing foreign investment, a developing digital infrastructure that's crucial, and a young, growing workforce. The rest of Africa is also growing well, collectively over 7%.
What a sweep across the globe. It's really clear this isn't just a localized thing.
Not at all.
These numbers paint such a compelling picture of strategic business shifts happening everywhere, from Canada's tech focus to India's talent surge, the Middle East's rapid adoption.
Yeah.
It really encourages you, the listener, to consider what these regional nuances mean for diverse global markets and how companies are adapting their customer service strategies.
Absolutely. And maybe to briefly summarize the core finding here.
Please.
The customer service outsourcing market is just experiencing consistent, strong growth globally. It demonstrates its critical role in modern business.
Undeniable.
And this growth, it's fundamentally driven by that relentless pursuit of technological transformation, ambitious global expansion by companies, and increasingly sophisticated strategies for, yes, cost optimization, but also value creation.
Right.
This data really provides invaluable insight into where businesses are investing their money and, frankly, what their priorities are in this evolving global economy.
Absolutely. And it leaves you with a final thought, doesn't it? As businesses keep embracing digital transformation, keep seeking that operational agility, how might the very definition of a good customer experience evolve? Especially when so much of it is outsourced.
Good question.
Will it become more standardized, or will providers innovate to offer even more personalized, maybe culturally nuanced interactions? What stands out to you listening to this about these numbers, and how might they influence your understanding of the global economy and the future of customer service itself?
Hey everyone, welcome back to the Deep Dive. Today we're really digging into something that's probably far more dynamic than you might first think. We're talking about the world of customer service outsourcing. And look, forget those old ideas of just, a basic call center. This is really becoming a strategic business move for companies all over the globe. We've gathered some really great insights from our key source, Cognitive Market Research, to help us navigate this.
Absolutely. And our mission here today really is to unpack that transformation. We want to explore the forces actually driving this market forward, the big challenges companies are facing, and maybe most excitingly, the trends shaping where it's all headed. Understanding this whole landscape is, well, it's crucial if you're looking to scale your business smartly, serve customers globally, and frankly, stay competitive.
Okay, so let's unpack this then. What's genuinely fueling the momentum here? I mean, beyond the obvious cost stuff. It often gets boiled down to just cutting costs, right? But the research suggests it's a bit more complex now. Yes, companies are definitely using it to strategically cut down expenses like infrastructure, staffing, training. That's all true. But the real evolution seems to be in operational efficiency. It's about being able to run support 24/7, sure, at a lower cost. But maybe more importantly, it's these advanced processes, shared service models. They're delivering serious cost savings, like upwards of 30, even 40%.
Exactly right. And what that actually means for businesses day to day is they can redirect some pretty significant internal resources. So instead of getting bogged down managing a huge in-house support team, which is a massive logistical challenge, right? They can refocus that energy, that capital, onto their core business. Things like R&D, product innovation. It's a fundamental shift, really, not just trimming the budget.
Okay, and here's where I think it gets really interesting. The whole global connection piece. As businesses push into new international markets, You see this huge spike in demand for support teams that are diverse, culturally aware, and, well, speak the right languages. Our sources really highlight how these outsourcing providers, because they have access to this global talent pool, they're uniquely set up to deliver that localized experience. The kind that really resonates with customers in different regions. It's more than just translating words, isn't it? It's about understanding the culture, which builds loyalty and makes sure people feel genuinely heard no matter where they are.
From a strategic perspective, this is just paramount. You can't overstate it. In today's world, everything's interconnected. Customers expect personalized, local interactions. It's not negotiable anymore. So having support that gets the subtle nuances, speaks the local dialect, understands the cultural context, that's not just a nice bonus. It's become a critical competitive advantage. It builds that deep trust, strengthens relationships for the long haul.
And then, of course, there's the digital revolution. It's changing everything in this space, too. Customers now, well, you expect seamless interactions, right? Across chat, email, social media, messaging apps, all of it. This need for true omnichannel support is bigger than ever. And our sources are showing that outsourcing partners are stepping up. They're deploying sophisticated tools, the right tech-skilled people who can manage all these different platforms effectively. It's not just about having chat and email anymore. It's about starting on one, maybe switching to another, and not having to repeat your whole story. That needs integrated systems, AI routing, and it leads to, well, happier customers and faster answers.
And that agility is precisely why companies look to outsourcing for omnichannel. I mean, think about it. How does a company keep up with every single new communication channel that pops up? A new social platform, another messaging app. You need constant internal retraining, huge investment. Outsourcing offers that capability almost instantly. You leverage their tools, their expertise without that massive upfront cost or headache.
So, okay, it sounds pretty great on the surface, almost like a perfect solution. But like any powerful strategy, there have got to be challenges and potential downsides, right? What are businesses bumping up against? Well, one of the biggest concerns we see is maintaining quality control and brand consistency. When a third party is managing your customer interactions, there's always that risk, isn't there? That your company's unique voice, the tone, maybe even specific product knowledge gets a bit diluted. And that kind of disconnect, it can definitely hit service quality, impact your brand's reputation, and, chip away at customer trust.
Yeah, what's really fascinating there is the tightrope walk companies have to do. It's such a delicate balance. They absolutely want the cost savings, the operational benefits, no question. But they just cannot afford to lose their unique identity or let the quality of those customer touchpoints slip. It's about protecting the very core of their brand while still trying to be efficient. It's tough.
And let's face it, in today's world, data is everything. Which brings us straight to security concerns. Data privacy, cybersecurity. These are huge hurdles. Handing over sensitive customer information to an external provider, well, it naturally raises concerns. How is it handled? Stored? What about breaches? Our sources point out that for industries like healthcare or finance, this is especially critical. They have to comply with strict rules like GDPR in Europe or HIPAA for health information in the US. These aren't just suggestions. There are strict legal requirements about data handling. Security becomes non-negotiable.
That's a critically important point. Trust is fundamentally built on security. For a lot of businesses, especially those handling really sensitive data, a breach isn't just a PR problem. It could be absolutely catastrophic. We're talking massive fines, serious damage to their reputation, maybe even losing customer confidence completely. So when you choose an outsourcer, you're not just picking a service provider, you're really choosing a security partner.
And even when you have, the best intentions, really well-trained multilingual agents, sometimes things still get lost in translation. It happens. Subtle dialects, local idioms, cultural references that can still be tricky, easily misinterpreted. Our sources explain that these miscommunications, even small ones, can really dial down the empathy that genuine connection customers are often looking for. It's a bit like trying to explain a joke from another culture. You might get the words, but miss the feeling behind it. And that ultimately impacts how satisfied customers are, whether they stick around.
It really does hit that human element of service, doesn't it? And it raises a key question. How do you truly connect with someone, make them feel understood when those cultural nuances are missed, even if you're speaking the same basic language? It's a real challenge that directly affects customer loyalty, because that positive feeling often comes from more than just understanding the words.
But the industry isn't just, standing still and worrying about these problems. It's adapting. It's evolving. And there are some really exciting trends emerging. One big shift our sources are pointing to is this move toward nearshoring and onshoring. So instead of just relying on partners way offshore, Companies are increasingly choosing providers in regions that are geographically closer or maybe culturally more aligned. This approach helps cut down time zone headaches, makes real-time communication way easier, and, importantly, helps meet those growing legal demands about where data has to reside.
Yeah, what's really interesting about that trend is how it tries to balance things. It balances that cost efficiency, which was the original big draw for outsourcing, right?
Mm.
With getting better control, smoother communication, and that stronger cultural fit. It feels like a more nuanced strategy than just chasing the absolute lowest cost, focusing more on overall value and strategic alignment.
And technology, of course, is just transforming everything. Customer service is definitely no exception here. Our sources show outsourcing firms are really leaning into AI and automation now. They're integrating tools like chatbots for quick answers, automated ticketing systems to get issues to the right person faster, even speech analytics too, like listen in and understand customer feelings or pain points in real time. And these advancements, they're cutting wait times, making agents more productive, and genuinely improving the customer experience with faster, more accurate help.
Stepping back to see the bigger picture, the trend here isn't really AI replacing humans entirely. It's more about AI empowering them. Automation takes care of the routine stuff, the repetitive queries, and that frees up the human agents to handle the complex issues, the emotionally charged interactions that need real empathy, genuine problem solving. So it kind of elevates the human role, you know? Agents become more like expert consultants or brand ambassadors, less like just script readers.
And finally, this really interesting shift. It's not just about saving a buck anymore. It's about making a real impact. We're seeing this strategic pivot where customer service outsourcing is viewed less as just a cost center and more as a key way to differentiate, focusing on the overall customer experience, or CX. Our sources talk about how the leading providers now are investing heavily in things like agent training, developing emotional intelligence skills using performance analytics, all to make sure every single customer interaction actually adds value. The message is clear. Delivering amazing customer service isn't optional anymore. It's absolutely essential if you want your brand to stand out and build that long-term loyalty.
It really brings up that fundamental question, doesn't it? How do you shift your mindset? How do you stop seeing customer service as just a necessary cost and start seeing it as a driver of profit, a real competitive edge? This trend shows that the smart companies, they're figuring it out. They understand that a great customer experience translates directly into a stronger brand and ultimately sustainable growth.
So let's try to wrap up our deep dive today. The customer service outsourcing market, well, it's clearly going through a pretty powerful transformation. It's being driven by this sophisticated chase for efficiency, yes, but also by the need for true global reach and adapting to all these digital demands. But, as we've discussed, it's not without its challenges. Companies have to carefully navigate things like keeping quality high, ensuring data is secure, and overcoming those subtle cultural communication gaps.
Right. And despite those complexities, those challenges we talked about, the potential here for businesses is huge. The ability to scale smartly, serve customers anywhere in the world, it's clearer than ever. This market keeps evolving, keeps offering more sophisticated ways for businesses to connect in our, well, very connected world.
And as we finish up this deep dive, here's something maybe to think about. Given how fast AI is advancing and how customer expectations for personalized, effortless service keep rising, how might the actual role of the human customer service agent change completely, say, in the next 5 years? What totally new skills might become absolutely critical in that future landscape? Thank you for joining us on this deep dive, drawing on those insights from cognitive market research. We really hope it helps you get well informed.